Intel was one of the original semiconductor companies, and Intel is really credited for bringing the PC market, to where it's at today. Intel put out the chips that made the PC market far more affordable. They've been just a staple in the marketplace for a long time. At one time, Intel was really the big behemoth in semiconductor, just a highly respected company. The last couple of years haven't been too good for Intel. They've actually been down quite a bit. They've been losing market share. They've been losing money, and their revenue has been going down. So the stock's been really hit. I believe that Intel is going to be back. I just don't know if it's a good investment or not. So I wanted to take them through my process and see if they're a good buy opportunity or if I should stay away from this troubled company. My name is Victor. I have an MBA and a lot of business experience, and I use that experience to analyze companies and share that analysis on YouTube. Do me a big favor and like my video and subscribe to my channel. That'd really help me out. Now, let me take Intel through my process and tell you what I think of the company. I've developed a process that works for me as I look at a company and consider investing in it. I first want to know if I want to be part owner in the company. Do I think the industry is good? Do I think the management team's doing a good job? Do I believe that the debt is under control and less than 3 times EBITDA and the balance sheet is strong? And I want a discount on the stock. That way I could see my hard-earned money go up in value over time. And based on the answers to those questions, I decide whether I should buy, hold, or sell. So as mentioned, Intel's been around for a long time, 40, 50 plus years. They started in California and really started developing chips that would eventually really be used as a center point for the PC market and now the laptop market. They have really been a respected company, again, for many decades. And more recently, they've just been really handed their lunch by NVIDIA, TSM, Broadcom. I mean, there's just a lot of very good players in semiconductor that are really operating quite well and really bringing the competition to Intel. The question is, will this company come back to really be a competitor in the marketplace? I don't expect them to be the leader any longer. I think NVIDIA would probably be too strong to beat right now, but I think they could be a solid player, but they really need to start operating well. Revenues are down for Intel. They were down 15%. And, that was somewhat acceptable by the marketplace in their last earnings because they were profitable, which is good to see. But they need to stop having down years and revenues go down. They really need to stabilize and start growing. That's one of the things that has really troubled Intel is they went from being really the leader to now just kind of trying to survive in the industry, which is really surprising to see. Taking a closer look at their income statement, it is very good to see that they're operating with a net income. That's very good. And although their revenue is going down, if they can get that growing again and maintain this profitability, they're going to be fine. Taking a look at their balance sheet, they have quite a bit more debt now. They're trying to restructure and really recreate the company. They want to start having more operations here in the US. They want to be a foundry, and that takes a lot of capital and it takes a lot of debt. And if I compare their debt with their EBITDA, they do not meet the metric that I'm looking for, which is less than 3 times EBITDA. It's actually a little bit more, not much more, but enough. And they don't qualify to have a good balance sheet for the reason that they don't hit the metric. And second is it's a turnaround story. So it's already implied risk. It's already, hey, they need to show a couple of solid quarters of being on the right track again. They need to lower their debt and pick up their EBITDA in order to get stronger on their balance sheet. The statement of cash flows, they had an 85% decrease in the cash flows from operations. So obviously that's very troubling to see cash flows drop that quickly. And it's very interesting to see Intel really struggle this poorly. I believe Intel is currently discounted by 13%. And I get there by really looking at their free cash flows and their earnings per share. And I think that if you look at earnings per share and free cash flows, you get to a value of the company of about $35, but the marketplace will sell you shares at $31.31. let me show you how I went through free cash flows and then earnings per share to get to these numbers. For free cash flow, I'm taking a 5-year average for the company because they are having to turn the company around. So their free cash flow numbers right now really don't represent the company that's really existed over the last 40 years. So I'm comfortable taking their 5-year average and using that as a starting point. And based on that starting point, I'm going to grow that by 10%. I think, better days are ahead for Intel. And based on those cash flows, these are the cash flows I expect over the next 4 years. In the future, I expect them to grow at 4%. I think their chips are in high demand. So their terminal value, all free cash flows beyond year 4, amount to almost $250 billion. I have a higher discount rate than you would expect for a high quality company. As mentioned, their balance sheet's not perfect right now. It's a turnaround story. So 10% weighted average cost of capital, I think, is representative of what the discount rate ought to be. Based on that, I get an intrinsic value, today's net present value of all those free cash flows of $194 billion. I'm going to add the cash on the balance sheet and take away the debt. And I'm going to get to an equity value of $169 billion for the company. Their current market cap's $142 billion. So the free cash flow method yields a 29% discount. Again, this is a huge assumption that I'm taking the 5-year average, but this is where the company is going to be valued if they can get back to where they were before. And where they were before is really about 2 years ago. So if they can get back to those days, I think this would be a valuation representative of Intel. Now, taking a look at earnings per share are not too good. Earnings per share is expected to be $1.70 per share, PE of 16, just because, again, Intel's lost a lot of confidence and credibility in the marketplace. So they're way lower than a Broadcom or most definitely an NVIDIA. And based on those figures and a growth rate of 4%, I use this formula to get to a per share value of $24.80 using the earnings per share value method. Currently, shares are traded at $31.31. So there's actually a premium if you look at earnings per share on Intel of 21%. I put more weight in the free cash flow method, actually take 2/3 free cash flow method, 1/3 the earnings per share method. When I blend the two, I think the stock is discounted by 13%. Looking at the Intel stock for the past year, they've had a lot of down and up action in the stock, but really the stock's done fairly well. Year to date, they're up 21.59%, and they do pay a 1.5% dividend. So really beginning in the beginning of the year to now, it's been an upward trend. It's just, to me, it just has too many question marks. The company has to turn around. The company has to get back to its growing of revenue, and they have to show free cash flows. I think a lot of this upward momentum is people are expecting it to go up, but I'm more of an investor that I need to see the evidence in the financial statements before I invest my hard-earned money. Comparing Intel to its competitors, Broadcom, AMD, and TSM, they ranked the lowest in the last year. No big surprise. In the last year, if you owned Intel, you're pretty much breaking even. You're down 2%. TSM is not doing great either. They're at 8%, and AMD is up about 10%. Broadcom doing great. Broadcom did great. I was a Broadcom shareholder up until about this range here, and then I sold my entire position just because I think now the stock's overvalued. It was the AI craze that pushed Broadcom through this section of their gains. But back to Intel, they obviously are lagging their industry, and if they get back and they become competitive, they could start earning some of these returns. So I'd like to see Intel come back to their glory days. It's a company that I think built part of the technology industry. A lot of innovation came out of Intel. So I'd really be rooting for Intel to come back to their glory days. If they do, I think their valuation is going to be higher than where they're currently traded. But frankly, it's going to take a lot for Intel to get back on track. And it might take a long time. It may take 2, 3, 4 years. And as an investor, there's just too many good choices to invest in rather than just sticking around waiting for Intel to bounce back. So that's my video on Intel. Hope you found it interesting. Do me a big favor and like my video and subscribe to my channel. I'd really appreciate that. Good luck investing in 2023.